It looks like personal income and spending, the consumer is holding up. At the same time, we're not seeing much inflation. What do you read from that?
Well, I think that's been the story for the last few years. The job market continues to be strong. The U.S. economy is creating a lot of jobs. Wage growth is ticking up, but only slowly, and inflation remains low. So to me, I read that as saying the U.S. economy still has capacity. We should allow the economy to continue to strengthen, allow more workers to find jobs. Hopefully that'll lead to higher wage growth. Eventually, I hope that'll translate into a little more inflation so we can hit our 2% inflation target. So that to me is a consistent story, but overall a pretty good news story.
So, Neel, how do you read the last 12 hours then? When you get the White House statement about tariffs on Mexico, when China's going to retaliate, and you're looking at this solid data, how do you, as a Fed president, interpret that?
Well, we have to try to separate out the long-term signals and the fundamentals from a lot of the noise and the volatility. And sometimes the data can send us misreading signals. A few months ago, the job market had a really lousy job report. My reaction to that was, let's just take our time and see how the job market responds. Is that really a trend, or is that just noise? Turned out so far that seemed to have just been noise. On the trade front, it's been more noise and more rhetoric than it has been real big actions that have really impacted the U.S. economy. Obviously, tariffs with Mexico potentially could be very damaging to the U.S. economy. Obviously, if the trade fight with China really goes down a bad path, that could also be troubling for the U.S. economy. So I'm trying to separate out what's noise, what's rhetoric, what's really going to affect the economy. So far, the fundamentals have been quite strong.